Hello folks, Jesse Wright with YouCouldBe.com. Today we're going to talk about finding a market. Sean Ray asks on Quora.com, what is your favorite way to find out what area of your market is the best to invest in for real estate? The first thing that I always look at when determining where I'm going to buy is how much money can I make. I want the highest rate of return that I could possibly get. So I always shoot for 40% as a rule. If I can't get 40%, then I don't want to buy the house. I'm not going to invest in those neighborhoods. So that pretty much rules out most of the affluent neighborhoods. Now, what I do is I like to invest in something called fringe properties. And what a fringe property is, to me, is it's close enough to a desirable neighborhood that I can charge a lot in rent, but it's also close enough to a lower income, less desirable neighborhood that I can also get a really good deal on the upfront costs. So, I'll figure out how much I can charge in rent, and then I'll figure out how much my property taxes are, and of course, how much it's going to cost to rehab the thing, and how much it's going to cost to actually purchase it. And then I'll see if all that totals up to where I can get my money back in 2.5 years, which is a 40% rate of return that I'm looking for. And if all that checks out, then I'll move on to step 2. So I'm going to, just to make this easier, I'm going to do a property analysis, an online property analysis, just to kind of show you what I do. There will be a few other little gems in there later in the video, just random things that I see as I look at this property. I have pre-selected one, but I haven't really looked at it too closely. So I'm just going to show you a few things that I do. Pop over to homepath.com, and I'm doing a search for St. Louis, Missouri. I just did St. Louis, Missouri because I knew there was going to be a lot of cheap property there. There's going to be a lot of property that I would never buy, and then there's going to be a lot of those properties on the fringe like I'm talking about. So I'm going to look at one on Warwick Avenue. This is a 3-bedroom, 1-bath. Right now the price is reduced. Love that. So I would try to get it for 80% of the asking price, which right now is $14,900. 3-bedroom, 1-bath. I think I already said that. We'll just show you a few pictures real quick. Right away, I see the houses are stacked right on top of each other. I don't normally like that when they, this just looks like a rough neighborhood just by this front picture. But I'm not going to judge it too harshly just yet. You look inside, and you can see that, it does have carpet, and that means that a lot of those rooms are going to have to be they're going to have new floors put down eventually, so that's an expense that I'll have to factor in. But yeah, looks like it could do for a rental, possibly, depending on the neighborhood. And the next thing I do is I take a look at the rent. And Fannie Mae has a deal with a company called Rent Range, and sometimes these things are great and sometimes they're horrible. So as you can see, the low rent in the area, according to Rent Range, is $695 a month. Median rent $1,250. High rent $1,938. And I'm going to pop open this Rent Range so you can see what we're working with and why it's pretty much useless in this particular situation. It's based on 78 comparables. That's great, but it's also based on a 2-mile radius, and so that just doesn't help us. You can see that these blue bars are for the rent in that 2-mile radius, and then the gray bars are the low, median, and high for the zip code, which that helps us a little more. And then the gold bar is what Rent Range says is the fair market rent according to Section 8. Those numbers are a little off because that figure actually includes about a little bit for utilities. It's not what your utilities would actually cost. I want to say that I normally charge about $90 less than whatever HUD says the fair market rents are if I'm working with a Section 8 tenant, and that usually works for me. But if I go above that, the last few times I tried to do it, never worked. So anyway, basically we're not going to be able to get what we want from this report. Now, I probably would end up renting out to a Section 8 tenant, so I guess it was a little bit useful. I know that I'll probably try for $950 or maybe $930 because that's the high rent for the zip code. But let's go take a look at one of my preferred methods of calculating rent, and that's at Rentometer. Now I've already entered everything in to make this video faster, but you'll just enter in the address, the price range that you're hoping to get, and the number of bedrooms. This is a pro light account. You can do free reports, at least like maybe 10 or 15 of them before they try to get you to sign up for an account. And when you do sign up for an account, you can choose how new these listings are that they're comparing your property to. So right now it's just set on 2 years, and that's fine for me. I'm going to go ahead and click Analyze My Rental, and you can see we have a much more bleak outcome. It says your rent may be way too high unless your apartment is in top condition or has more amenities than most. Now, I actually do charge, most of my rentals do look like this. If you look at this speedometer type thing, the Rentometer, most of mine will have the needle right where that needle's at. And that's because I invest in these fringe neighborhoods where people don't expect the properties to be safe, clean, and functional. And because my properties are safe, clean, and functional, even though they don't have granite countertops or anything like that, I'm able to charge way more than the other properties around there. So anyway, that's just some food for thought there. What I'm going to do is I'm going to take the property that is nearest to the one that we're looking at, which in this case is 1734 North Euclid Avenue, and I'm going to copy that. They're charging $825 a month. I'm going to look at that property in Zillow. I've already got it pulled up, and I want to see how closely, is it comparable? Is it, roughly the same quality of house as this other one? And I think this one's a little bit nicer, but still, I think that if they can get $834 a month or $850 a month or whatever it was they were charging, then so can I. So, that's what I do there. And then also, the last thing I'm going to do is I'm going to look at what Neighborhood Navigator says. Now, if you scroll down on Fannie Mae, all the way to the bottom of any listing, you'll see where it talks about housing information, and they pull all that information. You click View Now on any of these buttons right here, and it'll take you to the same website, which is Onboard Navigator. This is what Neighborhood Navigator looks like. Of course, they have school information, nearby establishments, so on and so forth. I look at the housing inventory, and this area, this zip code, has 30% of the properties vacant, which means it's a renter's market. It's not going to be as easy to rent the property out. I like that number to be closer to 15 or even 10%, because then it's just super easy to rent your properties out. And because I do invest in areas like that, my properties are almost always rented out before I'm even finished with the rehab. People see me working out there. I do my own rehabs, by the way. So people see me working, and I have a lease signed before I'm finished. Usually 2 to 3 weeks before I'm finished. So I do look at the housing inventory, and if a lot of them are vacant, I move on normally, and always, and try to find another place. Now there's a few other things you might want to look at. I'm not really worried about the weather, but highest level of school attained. Of course, the more low-income families in the area, the better your chances are of finding a Section 8 tenant. And then this is the one thing that I do take a look at: fair market rents. This is according to Housing and Urban Development. They say that for a 3-bedroom, you should expect to pay $1,031. But again, that number includes a small amount for utilities. So, I'd probably charge $930, and I would start out asking for $930 a month on this property if I bought it. If everything checked out and I knew that I could get, when I actually bought the property, I would figure, okay, I'm only going to be able to rent it out for $800 a month, and I would do my analysis accordingly. If everything checks out after I total up what it's going to cost me to rehab and so on and so forth, if I can still get 40-45% on an $800 a month rent, then I would probably buy it. Of course, I wouldn't here because, again, the housing inventory is so bad. But I'm trying to give you a look at how I do my market analysis. So I'm going to cut this video off here. There's a lot more that goes into it, but those are the main things. If you guys have a property that you want me to do an online analysis for on one of these videos, just leave a comment below. If you thought this video was helpful, please like and subscribe, and also share it with your friends. I'm Jesse Wright. This is youkouldbe.com. That's UKUDB.com. Thanks very much. I will see you in the next video.